Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. We're excited today to discuss S-Corp owners cut self-employment tax and max $72,000 Mega Backdoor Roth Solo 401k for 2026. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult with your tax attorney and financial professionals. So this is our second session of the day, our another daily solo 401k webinar and Q&A session with my solo 401k financial, where we help you to stop overpaying taxes and start building real retirement wealth. This is your chance to get answers. Please use the chat now to ask questions on today's topic or anything else. I see that we've already got a couple questions that were chatted up, so we'll field those here in a moment. Before we dive in, as we're going through it, we would ask you to please like the video, whether you're watching us on YouTube or X or Instagram or LinkedIn, so we can help to get the word out to other solopreneurs like you who might need this valuable information to help secure their retirement account. So with our first question here looks like a follow-up from the earlier session, perhaps. One last question before I sign up. You specifically stated that in my case, retroactive contribution for 2025 as a consultant, that it needs to be employer contribution. I did not have any employees in my DBA sole prop. I was the only one to receive income as the owner. Will that still work? And is there still time to do this if I sign up with Schwab or I have to file an extension? So it sounds like you are self-employed with no non-owner, non-spouse, full-time W-2 employees, and you did not set up a solo 401k either with us or with any platform before the end of 2025. So in that case, you can still set up a plan here in 2026 and make 2025 contributions. Sounds like there's no audio. Let's verify the audio real quick. One second. Thanks for letting us know. I'm hearing the audio on our end. So, and we tested the speakers before we got started. Okay. Yeah, and I see you're on StreamYard as well. So maybe log out and log back in. Okay, you got it now. Great, great. So what I was saying though is that for a sole prop who's setting up a new plan in 2026, you actually can still make all types of contributions, even employee, employer, as well as voluntary after tax for 2025. Now you would have to set up the plan in time to make those employee contributions by April 15th. If you file an extension as a sole prop, so in other words, for your 1040, that would give you more time to be able to make the employer and or the voluntary after tax by the extended tax return deadline of October 15th, but it would not give you more time to file or to make the employee contributions for 2025. If your business is not taxed as a sole prop, let's say you're an S-Corp and you're setting up a new plan in 2026, it's too late to make employee contributions, but you could still make employer and or voluntary after-tax contributions by the business tax return deadline, including any timely file extensions. So in other words, by March 16th, if your business is taxed as an S-Corp, or September 15th, if you file a timely extension for your 1120S. Now, we're totally neutral. Our plan is totally portable. Schwab is one of the top options as far as where customers are opening up accounts. So you can most definitely have the accounts at Schwab. I would budget, just to be safe, a couple weeks just to get everything set up and funded. We prepare the documents to establish the plan within the same business day when you sign up. So we move quick, but it'll take a few days to open up the accounts at Schwab. You can make the employee and or the employer and or the voluntary after tax. You can make all types if you're a sole prop. Hopefully that helps. Let us know if there's any further questions. Now, the other one is regarding the 1099-R. What I'm going to do is I'm going to flag your question and we'll follow up with you as soon as this is done. Let me just grab your email from the registration list here. One second. So we flagged your email and we'll follow up regarding the status here. Let me just grab your question real quick. All right. Thank you so much for the good questions. We're going to dive into the slides now, but as we go through it, if there's any questions, whether on this topic or any other topics, please don't hesitate to chat it over. So we already talked about the disclaimer. So the big problem here that we're talking about, is the issue that we see coming up, and the reason we wanted to host a webinar on this is that um, there's a conflict, there's a tension between what some solopreneurs' objective is in setting up a S corporation to operate their business, really their tax status, to elect the S corporation tax status to report their business income. There's a tension on as far as that objective and as far as being able to maximize their solo 401k contributions. So we're trying to bridge the gap here with this webinar between that tax reduction in terms of that S corp election and then retirement savings in terms of the solo 401k. So we want to explain the tension, and then we also want to explain how that tension is relieved if someone is trying to make Mega Backdoor Roth solo 401k contributions. So we'll look. We saw your email. Thank you so much. We'll follow up here shortly. So that's the tension between the objective of a tax perspective in terms of the tax objective of setting up and filing as an S corp versus being able to save for retirement via the solo 401k. Now, in terms of the S corp, let's start with the S corp. In a nutshell, the tax objective, and we're not here giving tax advice, but this is just based on feedback, et cetera, from clients, is that clients will set up and file as an S corp to lower their self-employment tax. So for example, if you operate as a sole proprietorship, the concept is all the income that you earn as a sole proprietor is going to be subject to self-employment tax. Whereas if you were to report your earned self-employment income, the income from your self-employed business as an S corp, you could split and separate some of that income. You could report some of that income as an employee. Specifically, it would be reported on a W-2, which would be subject to the payroll tax. But then the rest of the income reported as an owner, which would not be subject to the self-employment tax. So the idea is that you can reduce your self-employment tax by splitting the income. Okay, great. So now let's flip over and talk about on the other side with a solo 401k. So a solo 401k is a vehicle for self-employed individuals, including those whose business is taxed as an S corp, to be able to save for retirement. And it has the highest contribution limits available to any self-employed individual in terms of defined contribution plans. For example, for 2026, The overall limit is $72,000 or even more if you're age 50 plus. So if you're age 50 plus, it goes up to 80,000. And then if you're age 60 to 63, it actually goes up to 83,250. But your ability to contribute to the plan is based off of the W-2 wages. So that's where the potential tension comes in. Because from a S corporation perspective, all things being equal, individuals will want to lower their W-2 wages to lower that self-employment tax. But the lower that your W-2 wages are, this will then lower the types or lower the amount of contributions that you can contribute to the solo 401k, but with an important caveat, which is the Mega Backdoor Roth solo 401k contribution limits. So, for example, let's say uh, your overall income is $200,000, but you elect to be taxed as an S corp, and you pay yourself $100,000. So now, in terms of employer contributions, you would be able to contribute $25,000 because it's a function of those W-2 wages. Whereas if you had reported the entire amount as W-2 wages, $200,000, you'd be able to contribute more, $50,000 as an employer contribution, assuming that you didn't max out the employee because you'd still be subject to the overall limit. But you get the idea that your ability to contribute to the plan is a function of the W-2 wages. So if you're lowering your W-2 in order to achieve uh, benefits, tax benefits as an S corp, that could lower your ability to contribute to the solo 401k. But in order to really understand the impact, it's going to be important to understand the different contribution buckets. So let's first lay the foundation, and that'll lead us into the Mega Backdoor Roth and how that tension that we just discovered and just described is relieved. So when you make contributions to a solo 401k, you can contribute the highest contributions that are available to any defined contribution plan available to any self-employed individual. And that's because there are different types of contributions that you can make. You can make employee, you can make employer, and if your plan allows it, like the one offered by my solo 401k, you can make after-tax contributions. So the employee limit is 100% of your wages, dollar for dollar, up to $24,500 for 2026 or more if you're age 50 plus. The employer limit is 25% of your W-2 wages, whereas the after-tax contribution limit is 100% of your wages, dollar for dollar, up to $72,000 for 2026. So because the voluntary after-tax contribution limit is not a percentage, it's 100% dollar for dollar of your of your W-2 wages up to the overall limit. For those solopreneurs who are simply looking to maximize the Roth dollars that end up in their solo 401k, they find that they can still keep their wages relatively low. In other words, achieve that tax optimization benefit of having their business taxed as an S corporation, but still reach the overall limit that's available to them under the solo 401k. So they can have their cake and eat it too. So the flow would be to first establish your W-2 wages, then contribute. If you're, again, focused on the Mega Backdoor Roth, you can skip the employee, you can skip the employer, and you can just make a voluntary after-tax contribution. Then you transfer those voluntary after-tax solo 401k funds either to a Roth solo 401k or to a Roth IRA. So the purpose of that is that now the funds are in a Roth account where they're just like any other funds in a Roth account, where they've got the potential for tax-free growth. And then finally, thanks to Secure Act 2.0, now they've aligned Roth 401ks to Roth IRAs in terms of required minimum distributions, such that RMDs don't apply to Roth 401ks going forward, thanks to the Secure Act 2.0. So, in short, if someone were to uh, have at least $72,000 of W-2 wages for 2026, they could contribute 100% of those wages up to $72,000 as a voluntary after-tax contribution, and then transfer those funds either to a Roth solo 401k or a Roth IRA. So now they've maximized the Roth funds going into their Roth account via the Mega Backdoor Roth, but they've limited, I mean, depending on their income, right? But they've limited their W-2 wages to just $72,000 so that they're also obtaining, subject again to the facts and circumstances, but they are also then potentially obtaining the lowered self-employment tax via the S corporation strategy. Now, some common mistakes to avoid was going to be to set their salary too low, right? Because again, you're still limited to those W-2 wages in terms of the solo 401k contributions. You can't save more than you earn. So if you want to hit the $72,000 limit, you need at least $72,000 of W-2 wages. And if you want to go up even higher because you're age 50 plus, then you would need even additional wages to justify those even higher contributions of $80,000 or even $83,250 if you're age 60 to 63. It's also important to recognize that you do need plan documents like the ones offered by my solo 401k financial that allow for the Mega Backdoor Roth. So if you get a basic plan, for example, from a discount brokerage like Fidelity or Schwab, just to name a few, just to name a couple, their plan doesn't allow for the Mega Backdoor Roth. Another important step is to do that, to do the second step of the Mega Backdoor Roth strategy, which is to move the funds to the Roth account. So it's a two-step process. The after-tax contributions are first deposited to a separate voluntary after-tax solo 401k account, step one. Then step two, they're moved to the Roth account. So they need to go to that after-tax account so you can take advantage of the higher contribution limits, but you then need to move it to the Roth account so you got that potential for tax-free growth. Compliance considerations include just, of course, the caveat, right, that the S-Corp strategy is something that you most certainly need to work with your tax advisor on. We're just highlighting the issues from a solo 401k perspective. But we're aware, of course, that setting the salary is an important compliance consideration in consultation with your tax advisor, that's at least a reasonable salary based on the facts and circumstances. Again, making the Mega Backdoor Roth contributions, the foundation is the document. So you need to have a document like the one offered by my solo 401k financial that allows you to do that. Also, the deadlines, right? So if you want to be able to make Mega Backdoor Roth contributions for 2025, meaning you're making voluntary after-tax contributions, you can still set up a plan here in 2026 and make those voluntary after-tax contributions for 2025 by your business tax return deadline, including any timely filed extension. And then those contributions, again, would need to be made by that business tax return extension. So that's going to be March 16th in the case of an S-Corp for 2025, March 16th, 2026. Or if you file a timely extension for that 1120S, the S corporation tax return, then you'd have out until September 15th of 2026 to make those 2025 contributions. To get started, it's very easy. Just go to mysolo401k.net, click on open account. It's just 10 simple questions. That's how we capture the information that's needed to prepare the documents. Once the application is submitted and payment is made, we prepare the documents within the same business day. So an email goes out with a link to the secure portal where you can access the documents, and we take you through step by step to open up the accounts, et cetera, et cetera. Okay, thank you so much for joining. Thank you for checking out today's session. Again, if you're finding this to be helpful, please like the video. It's going to help us to get the word out to others like you. We also invite you to subscribe to the channels, whether you're on LinkedIn or YouTube or X, so that you get notifications of when we go live. You can hear the content that we come to bring every single day. We also invite you to join our community. You can join quickly and easily at mysolo401k.net/my community. It's totally free to join. All are welcome. We've got over 30,000 members, which translates to vibrant forums. There's a library of videos and webinars, so there's a ton of ways to learn and to share the knowledge. All right, thank you so much. I see your email or your comment share. It looks like it was rescheduled. So at any rate, we'll reach out to you today with a time that we'll call you by tomorrow. Thank you so much for jumping on and sharing. Thank you so much. So that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this solo 401k community. We'll be back here tomorrow with more crucial content to help you secure your retirement.